Pangaea is a logistics company focused on moving dry bulk on their big ships around the world. They primarily sail the Atlantic and have a lot of experience sailing the northern routes of the Atlantic. And during times when shipping rates are really high, boy, they make money hand over fist. Right now, shipping rates are low, but they continue to be profitable. I like keeping tabs on this little company. I've been a stockholder in this company for 4 years. And during the peaks, boy, I did really well. Right now, we're not in one of those, but you never know. Shipping rates start rising. Boy, keep an eye on Pangaea because it could be a 2 to 3 bagger very quickly. I got my hands on their latest financials, their financial release, and I've updated my analysis on Pangaea. I'd like to share that with you. My name is Victor. I have an MBA, a lot of business experience, and I like analyzing companies and then sharing that analysis on YouTube. Do me a big favor and like my video. Also consider subscribing to my channel. Now let's get into my process and my analysis of Pangaea. Over the years, I've developed a process for myself that involves 4 questions that lead me to a decision to buy, hold, or sell a particular stock. I first need to make a decision. Do I want to be an owner in this company? Do I like the industry they operate in? Is the management team doing a good job and operating the company well? Is debt under control and less than 3 times EBITDA? And I want to discount the stock. That way I can see my hard-earned money go up in value. And the best way to do that is to buy a stock that is discounted. So I want a discount on that stock based on the answers to those questions of buy, hold, or sell a particular stock. So the story on Pangaea is that they're a small company. They're tiny compared to these other huge companies with market caps of 100 billion, if not $1 trillion. These guys are less than $1 billion in market cap. They operate in one business, which is moving dry bulk. In good times, boy, they produce a lot of profits. And I really like having one shipping company in my portfolio. They pay a very high dividend, and this quarter they've been profitable. Even though shipping rates are down, Pangaea is profitable, which shows that the management team's doing a really good job. So I like this little company. I have the advantage, when it comes to analysis. Not a lot of analysts cover this company. It's too small. So I can keep an eye on it and see when it's really unappreciated, undervalued, and buy it at the right times, and then see it rise and then get out of the position. So I'm feeling like we might be a little early, maybe a quarter ahead of that time, but I'm feeling like that's going to happen again. I've doubled and tripled my money on this company a few times. So here we go again, potentially. If we see shipping rates go up, that's going to be good news for stockholders. Much of the profitability and the success of Pangaea depends on shipping rates. And you can see here's the shipping rates in June of 2021. You saw them really rise. Remember those supply chain issues we had? Well, it really led to shipping companies really making a lot of money. And since then, the supply chain issues are gone. So we're back to lower shipping rates. And companies have to really focus on operating well to turn a profit. The other thing I'm seeing is more recently, you're seeing on the Atlantic routes, you're seeing shipping rates go up. Now, they haven't gone up dramatically. They've just gone up a little bit. But if they keep going up, that's a real signal that these companies, their profits are going to go up as well. So to be an investor in Pangaea or any other shipping company, ocean freight shipping company, you have to monitor shipping rates and make sure that you understand if the rates are trending up or if the rates are trending down. Looking at the company's P&L, you can see that there's been a significant reduction in revenues. And that's been based on those rates because the volumes have been about the same, but the rates have really changed. So you see that you had a $63 million drop in revenue in the most recent quarter that was closed. The good news is that the company remained profitable. So that's good to see that the company is operated in a way where they continue to be profitable. Very good. For the first half, you can see that revenues have really dropped. For the first half of 22, they're up at $349 million in revenue. And this year, first 6 months, they're at 218. Again, they're profitable. So that's very good to see that the company's profitable, even though the rates are down in shipping. Pangaea has a fair amount of cash. It's good that they kept a lot of the cash that they had from that boom period when the rates were really high. They did pay a high dividend, but they did keep a fair amount of cash on their balance sheet. The cash on the balance sheet's actually higher than their amount of long-term debt. So that's very good. They could pay off all their debts pretty much very quickly and then be able to operate without any debt. So it's good to see the balance sheet's in good shape with Pangaea. When we look at the statement of cash flows, they produced positive cash flows from operations of 13.5 million. Big drop from the same period, first 6 months of 2022 versus first 6 months of 23. But that's expected due to the rates. They didn't put any CapEx into their ships, and therefore they didn't have any CapEx year to date. So they have positive free cash flow this year. I believe the Pangaea is currently discounted by 35%. What that means is that I think each share is really worth about $8.12, but the market will sell you as many shares as you want to buy for $6 per share. I use two methods. I used the free cash flow method, and I used the earnings per share method to determine what is that company worth. If we just look at the cash flows, which I'm expecting they're going to do about $40 million of free cash this year, and I'm just going to grow those cash flows very modestly at 5% per year. And then I'm going to grow terminal value by 2%. We have cash flows expected for the first 4 years here. And then all cash flows beyond year 4 would be in the terminal value. And I'm going to discount all those free cash flows I expect by 11%, a nice high weighted average cost of capital, since this is a small company and is a higher risk investment. Based on that weighted average cost of capital, all those free cash flows are worth $409 million in today's outlook. They have $84 million of cash and $106 million of debt. So I add the cash and I subtract the debt. So I get to $388 million is what I think the company is worth. Their market cap is $313 million. So it offers up a discount of 41%. Other way of saying it is, I think each share is worth $8.44, but the market will sell you shares at $6 per share. Earnings per share, it's expected they're going to have earnings per share of 86 cents. Nice low PE of 10. And based on those factors and a growth rate, very low growth rate of 2%, I'm going to get a valuation based on this formula here of $7.48 is the value if we use the earnings per share method. The market will sell you shares at $6 per share. So you get about a 25% discount if you look at earnings per share value. I blend the two. I take more weight in this guy. I use 2/3 of the value of free cash flows, and I take 1/3 of earnings per share. And I blend the two, and I get to 35% discount. Or I would say that the value of Pangaea is $8.12 per share, but the market will sell you shares at $6 per share. So let me take Pangaea through my scorecard. Do I want to be part owner in this company, in this industry? Yes. I like this company. I like they're operating profitably, even though the rates are down. It just goes to show that these guys really know their business. They know how to operate a business. And I just said that their management team's doing a good job. So I like that as well. Their debt's under control, well below 3 times EBITDA. Really nice discount on the stock, and they pay a nice dividend. So I'm going to continue to buy shares in Pangaea, especially as the rates are low. As soon as we see rates climb, you're going to see this stock price climb as well. Looking at where the stock is traded, boy, just an up and down stock. It really rose really fast at the end of 2022, but it just collapsed at the beginning of 2023. I think once the shipping rates really started to drop, everybody left these freight companies. It did a nice rise here up until the beginning of August. And once again, once they had their earnings and people realized, hey, those shipping rates are low. So these are opportunities for me. These are really good opportunities because I just think that I'm getting a lot of value in a stock like this. And small stocks don't have a bunch of analysts covering them. And these stocks tend to fly under the radar, and I can buy them at a discount, watch them operate, and then they go up very quickly. They're also riskier. That's why I have a higher weighted average cost of capital. But it is fun to track a Pangaea and invest in it and kind of use the small company as my advantage because I can analyze it. I can, stay ahead of trends and invest in the company when the investing is good. Surprisingly, the company is up 10.7% for the year, even though you've seen this type of volatility. And they pay a 6.7% dividend, a really nice high dividend. So to be an investor in Pangaea, you really got to keep up with those shipping rates and understand the logistics business at a high level. I like investing in this company. I think having followed them for 4+ years, I have formed an opinion that the company is well operated. So I'm comfortable. I'm also comfortable in knowing when to get in and get out of this investment. It's a good swing trade. Invest when rates are down and on the rise. And once those rates get really high, take your gains. Don't expect this to be a 10 or 20 bagger because once those shipping rates drop, so will the stock price. So it's a fun stock to have and really know what type of pattern I should be investing in. I'm a long-term investor. I'm not going to be day trading anytime soon. But with this type of stock, it's more of a seasonal stock. You need to know when to buy and then when to sell. So I appreciate you watching the video. I hope you found it interesting. Do me a favor and like the video and subscribe to my channel. You'll see more videos like this one. Thank you very much for watching and good luck investing in 2023.